Most psychological challenges with trading boil down to either being under-controlled on one hand or over-controlled on the other. On one hand, we have the impulsive trader, that's the under control, who loses control out of frustration, out of a fear of missing moves. How many of you have chased a market because you were afraid it was going to move without you? I mean, we've all done that, right? I mean, and you get the absolute worst trade location and the thing just reverses against you. It's very frustrating. That's under control. The fear is controlling you. The fear of missing the move is controlling you. You are not controlling your own performance. The trader who is under controlled, it's almost like they have attention deficit disorder. They lose their focus and they lose their ability to be governed by rules. On the other hand, we have the over-controlled trader. The trader who becomes so fearful and hesitant that they freeze. And so there's opportunity there and they won't take it. I had a situation just recently where a trader had fantastic ideas on the day. And in fact, he emailed a bunch of his colleagues at the firm what he was seeing in the market. Great ideas. They made a bunch of money off the ideas. They came over to him and they said, "Oh, you really nailed that one." Well, what did he do? He never got into those positions. He was emailing. He had all the right ideas. He never got into it. Well, you know, he couldn't get quite the right price, and maybe we'll go down a couple more ticks. He's so anxious about losing money that he never took advantage of the opportunity that he had identified. There's such a need for safety that he couldn't take risk. Attention in that situation becomes self-focused, and so they're not absorbed in markets and not able to act upon what they see. Most trading problems boil down to the issue of being under-controlled on one hand or over-controlled on the other, or sometimes people will oscillate between the two. They'll become hesitant and fearful, then they'll finally make a trade, they'll lose money, then they get angry and frustrated, and then they get impulsive, and then they lose too much money, and then they get hesitant and fearful again, and it will cycle around. So much of trading psychology boils down to techniques for establishing control under conditions of impulsivity on one hand and anxiety and hesitance on the other.